cash budget is a statement of planned cash receipts and cash disbursement used to estimate cash surplus and cash deficit. Let us look at this formula to find cash surplus or cash deficit. Total cash receipts inflow minus total cash disbursement outflow gives you net cash flow. Net cash flow plus beginning cash balance equal ending cash balance. Ending cash balance minus minimum cash balance gives you, if it gives a negative figure, that will be a cash deficit. This is required total financing. Here it requires to look for short-term financing. Or if you give a positive figure, that is cash surplus. There will be excess cash balance. This you can invest in short-term investment. Cash receipts include all items from which cash inflows result in any given financial period. The most common components include cash sales, collections of accounts receivable, dividends received, proceeds from sales of assets, taken from the question. Under sales, Dinosaur's sales in February and March were 50K and 55K respectively. Taken from question again. Sales of 60K, 75K and 58K have been forecast for April, May and June respectively. %10 of the company's sales have been for cash. That is cash sales. 10%. So which means that 10% of the sales is cash collected at the point of sales. Cash is collected immediately at the point of sales. So 10% times 60K is 6,000. So it means that 6,000 is collected immediately in April for April sales. 10% times 75K is 7.5K. So 7.5K is collected immediately in May. 10% times 58K gives you 5.8K. %70 have generated accounts receivable collected after 1 month. Accounts receivable collection lag 1 month, 70%. Basically, it means a sales made today, but cash is collected 1 month later. So there's a 1 month lag from the point of sales, to the point of cash collection. 70% times 55 is 38.5K. So 70% of the March sales is collected in April. 70% times 60K gives you 42K. 70% times 75K gives you 52.5K. 20% have generated accounts receivable collected after 2 months. It means at the point of sales, the point of cash collection, there's a lag of 2 months. So you make a sales today and collect cash in 2 months' time. So 20% of the sales will be collected in 2 months' time. So 20% times 50K gives you 10,000. So 20% of February sales will be collected in April. 20% times 55K gives you 11K. 20% times 60K gives you 12K. Other cash receipts. In April, the firm will receive a 15,000 dividends from shares in a subsidiary. So there's dividends and 15K is received in April. Let us find the total cash receipts. Add up all the figures in April. It gives you 69,500. This is the total cash receipts in April. Add up all the figures in May and you have 60.5K. This is the total cash receipts in May. Add up all the figures in June and you have a total figure of 70.3K. This is the total cash receipts in June. Let us remove all the workings. Please spend a moment to look at the answer.